Good afternoon and welcome to ASEAN Midday Market Watch. Our guest today is Jeff Halley. He's a senior market analyst, Asia Pacific at OANDA. Jeff, great to have you on the show.
Thanks, guys. Happy Monday.
Yeah, had a good holiday, Jeff?
Yeah, managed to get as far as Bali last week, so it's nice to be in a country we can actually travel around in on an aeroplane. It was quite an unusual experience after 1 year.
Good to hear that. Now, let's take a quick look at markets first and then get your insights. Now, if we look around the region, it's pretty mixed around Asia. The Nikkei is trading at 26,589.92. It's down 0.6%. Shanghai Composite is down 0.66% at 3,421.85. The Hang Seng is down 1.69% at 26,382.06. But the ASX is up 0.51% at 6,668.10. The Kospi is up 0.2% as well at 2,736.98. Overall, closer to home in the ASEAN exchanges, we have the SGX, which is trading at 2,839. It is currently unchanged. Now, the Bursa Malaysia is trading at 1,622.51. It's up marginally at 0.04%. Now, Jeff, looking at markets across the region, obviously taking a cue from the poor numbers, the non-farm payroll numbers on Friday out of the US on one hand, but on the other hand, news of obviously the 900 plus billion US dollar stimulus in the pipeline. So what's your view on markets right now?
We've seen a couple of things in action here today, Brian. You're right, markets did jump. Equities did rally early this morning on this US fiscal stimulus news that we saw coming out yesterday. And the talk is that they could even get that enacted through the Senate by the end of today. So it could happen very, very quickly. And those Republicans seem to be on board with that number. Unfortunately, later on this morning, we saw the Trump administration announce their intentions to sanction, I think it was around 12 Chinese government officials, both in Hong Kong and in the mainland, over removing some Hong Kong legislators. That's caused an immediate U-turn in sentiment, that geopolitical tension that dogged the markets all through this year and probably over the last 4 years. Saw China drop, saw obviously Hong Kong drop more than most because it's directed at Hong Kong officials and the legislature there. That's had a follow through into Japan as well. But after falling initially, Singapore, South Korea, they actually regained those losses quite quickly. So I think this is actually just a short-term movement, and it's not the start of the top of the market, if that's what your watchers are thinking.
Yeah, and where do you see value in markets right now? Specific sectors, specific markets perhaps in the region?
Yeah, I know what's going to happen. I can see that with this fiscal stimulus and vaccinations starting in countries such as the UK this week, that we're going to see investors piling into those bombed out sectors such as airlines, hotels, leisure, consumer discretionary. Look, I'm not going to stand in front of that, but I will say I don't believe the hotel industry or the airline industry are going to come back in any shape or form that we know it in 2021. You may find more value in resource companies, which I know have already rallied, but I think there's still more to go there because I think the rebound in 2021 could be quite spectacular, particularly in Asia. Also, perhaps commercial property REITs, not necessarily retail REITs, but certainly commercial property, industrial property REITs. They could be sectors I feel that could outperform on this recovery trade. Even things like taxi companies, for example, public transport companies, which have also been quite bombed out, particularly in Singapore, might be quite attractive sectors if we start seeing the light at the end of the COVID tunnel.
You know, you talked about commodities, and I want to drill down into one particular commodity that's just seen a spectacular rise this year, iron ore. What's driving the growth for that?
China, 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 China. We could probably say to that one. I mean, China's data has just been a never-ending procession of impressive increases and recoveries. And this morning we saw China exports for November rise 21%. It's about, I think my math's about 12% over what the market was, about 10% over what the market was expecting. Imports also rose by 4.5%. Look, China has this voracious appetite for commodities, and that's what's been driving prices up. So iron ore is something that can't easily be replaced, and they get most of it from Australia. And to a certain extent, I think that has been supporting Australian markets today as well. But definitely the prospects of a strong rebound in 2021 is driving these commodity outlooks, and China itself is driving that consumption.
Now, this is the start of the week. What are the key data and reports globally that we need to be keeping our eye out for?
Well, after the frenzy of the first week of the month, and we always get an avalanche of data in the first week of the month, it gets a little quiet this week. We see a lot of CPIs coming out, particularly in Japan and in China in the midweek. It's expected to show that both are actually struggling with a bit of deflation at the moment. Although in China's case, I think it'll be transitory. If energy prices, oil prices remain at the levels they are, and the yuan doesn't continue appreciating too much from here in the near term, that pressure should ease in China. We also have the European Central Bank meeting on Thursday, which I expect them to create more easing. But really the two things that are really on markets' minds at the moment are one, the US fiscal stimulus, and B, number two, Brexit and these Brexit trade talks, which are on a knife edge according to the newspapers everywhere.
And that's causing right down to the wire.
As ever, it always is. But the Brits are actually resubmitting their internal markets bill today as well, with all the nasty pieces in it that were deemed illegal by everybody else in Europe and other parts of the world. So it could be a negotiating tactic or not. But it seems to me that Britain is prepared to go its own way if the EU doesn't buckle. So I'm expecting a lot of volatility in sterling over this. So if any of your viewers have got positions there, they should remain glued to their news tickers, because any headlines coming out from Brexit could see a big move up or down in sterling, depending on whether it's a positive outcome for those talks or it looks like they're doomed to failure.
Thanks for your insights, Jeff. It was great speaking to you. We've been speaking.
Always a pleasure.
We've been speaking to Jeffrey Halley. He's the Senior Market Analyst, Asia Pacific at OANDA, on ASEAN's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia.